Alright, good morning. Let's go over today's trade plan. So in the overnight session we saw that S&P was very balanced and just continued to trade within a range. At this point we have support at 72 to 75, and if buyers are going to remain in control, then we want to see ES being held above that zone. So the first test of that zone, we expect responsive buyers, and that's really a very key area in the market at this point short term. And if we can hold 72 to 75, then on the upside, we can go test 82.5 and potentially 85.75 to 87.75. Now today is a holiday in Europe, and the European markets are closed, and we're seeing pretty light volume in the US markets as well. But looking at the past 2 years, if you look at May 1st in 2013 and 2012, you'll see that despite the low volume, because of the economic reports out that day, we've actually ended up with a pretty decent range. Now, within the current context, we have econ reports out, ISM Manufacturing Index being the primary catalyst this morning, but then we also have the non-farm due tomorrow. So because of that, I think the upside in S&P will be limited to the initial resistance zone, which is about 10 points from here. And if we get a deeper pullback, then it might actually be limited to 82.5 potentially. But initial resistance is a good spot to certainly take profit if you're long. But in the right context, if the other markets are also hitting resistance, it could even be a spot to put on a short for a small rotation type setup. Maybe 3 to 5 points, something like that. But the main idea is that we want to see the ES balancing above initial support today. In the other markets, we want to see NQ holding above 35.61 to 35.66, and TF to hold above 11.20 to 11.22. If those other markets start breaking below those support zones, then that would be a red flag for ES, and we could get a push lower. So below 72 to 75, we have support at 65 to 67, and on first test, I would expect responsive buyers there as well. But if the 65 zone breaks, that could result in a shift in the short-term control from buyers to sellers. So a break below 72 to 75 would be an early warning sign. If we're going to get decent strength, then that zone must hold, and that would be a red flag for buyers. But if we break 65, that could result in liquidation. So I'm not expecting a move all the way back down to 65, but that assumes that the bullish bias and is going to continue, and buyers are going to remain in control. So for now, the main focus is really on the 72 to 75 zone, and 35.61 to 66 in NQ, 11.20 to 22 in TF. The other markets are still relatively weak. Bigger picture, they're still showing a pretty large divergence compared to ES. So that's the other reason that the upside could be limited in the S&P, because it's already moved up so much compared to the other markets that those other markets now need to put in a catch-up move in order for ES to really continue pushing higher, and test the all-time high and potentially make a new high. So with TF, 2022, very key support, but on the upside, we do want to see TF actually trading above 11.27 and 11.31 to 32 in order to really support the scenario of ES making new highs. So that's the other thing to just watch for today. But right now, heading into the open, primary focus is the 72 to 75 zone. As long as the buyers can hold it, there's still a shot at pushing higher. Testing the overnight high, 82.5, and then the extended upside objective would be 85.75 to 87.75. On the econ front, again, the main catalyst is ISM Manufacturing Index at 9 a.m. Central. So we could get a directional push off the econ report, and then the market simply balances in a range for the remainder of the session. So those are the main expectations. Let's see if the buyers can hold it together this morning, and we'll take it from there.